In the meantime, shoppers are planning to watch their wallets this holiday shopping season. Steve Leisman joins us now with the latest results from the All-America survey. Steve, what are you hearing?
Well, what we're seeing, Becky, the All-America Economic Survey forecasting a softish Christmas where consumers watch their spending. And that comes, by the way, after hitting the malls last year with some abandon. I just love this opening chart, which is showing the intended spending over the last 4 years. Let's go back to 2019. Before the pandemic, we were still in Kansas. 987 was the intended spending per respondent. 2020, the pandemic hits, it falls down to 886. 2021, wallets full of stimulus cash and savings goes up above 1,000. And here we are now, down about 11% from last year, $907, above the level of 2020, but not back in Kansas yet, 987. So a softish Christmas coming down. And you can see that when we ask specifically, are you going to spend more or less than last year? Take a look at this next chart. And what you'll see is 46% about the same. That was down from 51%. That was, again, in Kansas there. 41% will spend less. 11% will spend more. And you can see here some of the metrics here. You want to go back and see when things were really bad. Take a look in 2008 when 37% were just the same. 55% were going to spend less, and only 7% were going to spend more. So not as bad as it was, say, for example, in the great financial crisis, but certainly not as good as we were before the pandemic. Why are people spending less? Well, you can imagine downbeat views on the economy because the economy is in bad shape. Much better, much higher numbers than last year. Inflation's a big factor. And not as many being paid less. Interesting number. We'll come back to that in just a second. I want to show you their 41% spending less. The next chart here, which looks at the inflationary impact. We said, okay, you're spending less. What impact directly does inflation have? 70% say they're spending less entirely or mostly because of inflation. 27% saying not a lot. One other thing we noted here is an increasing use of credit cards that, again, is a reason for some concern, but measured concern. 30% compared to 22% are going to use credit cards or debt that they're not going to pay off immediately to buy holiday spending. It's a big jump, but that 30% is more normal. It was down to 22 last year because people had a lot of cash. So, Becky, let the holiday consumer debate begin. We have inflation on the one hand, poor attitudes about the economy, but I just looked it up this morning. 4.3 million employed Americans who have paychecks to spend. So that's the debate, I think, right now.
Yeah, I mean, I think anytime you start to hear about pulling back and concerns about a recession next year, you're going to hear employers start talking about the potential for layoffs and cutting back in terms of their spending. And you're going to hear people start talking about how they're going to plan on spending less money. I don't know how that always translates into reality with it. If you're thinking you're going to spend less money, then you're thinking you're going to buy a lot less just because inflation means that even if you spent the same amount, you would be buying less in volume terms. I wonder how that works out.
Well, actually, we have some data on that, Becky. Among those who are spending more, the 11%, a big chunk, or the biggest chunk, say it's because their paychecks are higher. The next the next highest answer is because of inflation. So inflation shows up on both sides, on the spending more and the spending less. People are aware of it. People know it. Now, we did ask about job security for the first time, and 17% of the public does have some concern about job security. Only 6% are seriously concerned. So I don't know that that's a big factor this year, but certainly if you think the economy is going to be slowing, that perhaps your job is in jeopardy for next year, that's also a factor, I think, that might hold people back.